Hello, everybody, and welcome to the Trading with Ashley show. Today is very special. I love today's show because I have a very special guest on with me, Stocks with Josh, and I'm so excited to have Josh share with you his perspective. You know, most of you realize I sell options for a living. So one of the main stocks that I love to sell options on because it generates so much premium is MicroStrategy, ticker symbol NSTR. Now, MicroStrategy does act as like a leveraged play on Bitcoin, but there's no management fees. That's why I love selling puts on MicroStrategy. And if you have 100 shares, you can then turn around and sell calls. But MicroStrategy actually follows the trajectory of Bitcoin. So it's important to better understand the technicals on Bitcoin so that you can make the best possible decision so that you enter MicroStrategy at the right level. And who better to share that with us than the GOAT himself of charting, Josh. And so I'm going to ask Josh to share his perspective on where Bitcoin is in the current cycle and where it might be going. And this will help us be more informed investors and we'll all make better decisions. So I'm happy to welcome Josh to the show.
Thank you, Ashley, for having me on your show. I love your show and everything that you're putting out. It's so educational and I think it helps so many people, and I really love getting your fresh perspective and your smile and everything that you're doing. So thank you for having me as a guest. I'm really honored.
Thank you. The honor's all mine.
Bitcoin, it just got rejected off of 60K, and I think that was actually reasonably expected because it had run up pretty fast after making a higher swing low. And so that was going to be the first major test, and it was reasonable that we pull back. Now, we've got to take a big step back, and I have to mention that Bitcoin largely goes through these periods of consolidation after making major moves, and we've been in a period of consolidation since March. And normally, it will consolidate for 200 days before breaking out one way or the other. And we're getting very, very close to that number. And so Bitcoin's not doing anything unusual or anything out of the ordinary. And I'm going to just, if you want me to go into the chart, how would you like me to proceed?
So if you will take us into the charts and show us the different levels that we need to look out for, that'd be helpful. Thank you.
Not a problem. I'm going to go through and I'm going to show you a logarithmic historical view of Bitcoin and give you a little bit of a picture of where it's at in this current Bitcoin cycle. And offline, Ashley and I have talked about just being an investor in Bitcoin. Everybody comes to it in this general cryptocurrency market at different times. And there's really cycles that are very predictable, and that makes it very different or a little bit easier for people to understand than maybe some of the typical cycles in Wall Street because there's so many sectors and you're never quite sure, you know, are we rolling into utilities or commodities right now? But Bitcoin has its own timeline and its own cycle. And I'm going to quickly give you like a micro overview of all of the last 4 major cycles, but we're going to go fast. So let me just jump you into that chart. And then I'm going to give you a little bit of an understanding of where we're at in this cycle and what we're wanting to see. So let me pull up that chart real quick.
Yes,
all right.
We're very fortunate to have all this alpha that you're dropping. Thank you so much.
My pleasure. Okay, so let's just start right off by looking at the last 4 Bitcoin cycles. You know, we had each of these had in them a pivotal halving moment, which is illustrated by these white dotted lines. And I've got the years on the top, which sort of indicate when the price peaked out, the 2013 Bitcoin cycle, 2017, 2021, and 2024. And the very first time this thing exploded and made an all-time high after a halving was back in 2013 when it moved up 60,000%. And so, you know, you can only imagine what a monumental move that was and a surprise it was at the time. And after that, we fell into a winter, right? So we sort of went into a long period of pulling down from that price and consolidating. And that eventually led us into the 2017 cycle. And at that time, from the winter low to the bull cycle top, we went up 12,000%. That was a 12,000% move. Now, I was really only closely watching crypto after 2017. And so I didn't get to participate in these two amazing moves. But in 2021 is where I got my feet largely wet and began to learn these cycles. And you can see that right away, I'll just keep going forward. In that cycle, after the halving from the winter low, we went up 2,000%. Huge move, right? And after that, we went into the winter period and a long phase of decline. Typically lasts around 400 days. And now we're in the 2024 cycle. And we came up off the lows, which were around 15,500. We came all the way back to the previous cycle high, which was right around 68,000. We've done better than that. But we've come up against the previous monthly candle high. So far, we haven't actually closed above it. We've been pushed back by this previous high, and we've been consolidating here. Okay. Now, real quick, I just want to point out to your viewers, Ashley, that you can see something. First of all, Bitcoin's just been an absolute beast, a rocket ship performer. But it's also important to realize that we are having slowing momentum. 60K, 12K is a lot less than 60. 2K is a lot less than 12. Oops, let me grab that. And obviously, this last time around, we've moved up, and everybody's thrilled that Bitcoin is at the price that it is. But obviously, we're only moving up 350%. And why do I take the time to illustrate that? Because even though it's reasonable, we're in a bull market cycle on Bitcoin, and we should all be bullish because the cycle's not over. And typically, you get two large pumps each cycle, and we've gotten our first pump. First pump is what takes you out of winter, right? And takes you to the halving, which is illustrated by these white dotted lines. But then there also comes a second high and a second pump, which we haven't gotten yet. And so we have that to look forward to. For some people that are feeling like, maybe it's over, no, that wouldn't be the case. Back in 2021, we had this initial move. Actually, this initial move coming out of winter was here. It normally pulls back to the halving and then gives us a second pump. And then we had a pullback from that high, and we got our final all-time high. This cycle has been a little different. We came out of the winter. Let me just pull off some of these little drawings. We came up out of the winter here, and instead of having much of a pullback, we really had a 200-day sideways consolidation and just ripped all the way up to the halving event. And since then, we've been in it roughly a 200-day consolidation. And I think that this is actually very bullish. This is a bull flag here. It's a continuation pattern and followed by another bull flag. And there is the belief that we could go higher. So how high could we go? And when do we know the party is over? Well, I'm going to give you that really simple, and then I'll come back to you, Ashley. So we're waiting right now, and let me clean up this chart for a minute. We're waiting for a candle to break out above the previous all-time high, the previous all-time high close, right? So we're waiting for that to happen. So far, every time, and that's right here at 68,346, every time we've tried to get above that price, that previous market high, we've ended up getting rejected. Okay, I'm showing you the weekly candles. I'm going to pop it over to the monthly candle. Just give us a little bit of an easier view on it. Every single time we've attempted to cross over it, you could see that we crossed it here, but we didn't open and close a candle above it here. We crossed it here. We didn't open and close a candle above it. We crossed it here, and we just have continuously gotten rejected at this previous high. And so you're going to find that when this ultimately crosses above this $68,000 threshold, and we actually open and close a candle above the previous high, you're going to begin to find on Wall Street, cryptocurrency market, that people will be sounding the alarm. And you say, okay, well, why, Josh? Every single time a fib level is broken in the past, and here's a good example of one, this candle pushed above, this candle opened and closed above, we hit the next fib level, okay? If that happens here on Bitcoin, if we get that confirmation on a monthly candle that opens and closes above 68K, the next level above that we would hit is $171,184, $171,000. And let me just put some things into perspective. You say, okay, but is that fib level realistic? That's the same blue fib level that we hit in 2021, okay? So that would be the same thing that was done last cycle. If we get above this 68, it would be the exact same thing that happened last time. There would be an expected move up to 171. That's the positive bull story. The bearish story is we got to keep an eye, like we are on the 68, we got to keep an eye on this 49, okay? If ever we open and close a candle beneath 49, then regardless of what's happening and regardless of how bright Michael Saylor's eyes shine laser, we need to be aware that we could be entering into a decline phase, and structural support that I am predicting for the next bear winter would be a comeback around this 27 to 32. That's a quick overview of what I see going on right now, Ashley.
Thank you so much. It's so helpful to have those technicals to anchor our trading to. One thing that I have a question on that you may have thought about, that some of our viewers may have questions on, that cycle is pretty predictable. I mean, we don't understand, don't know the exact timing in the nuances of the cycle. But the cycle seems to be pretty predictable. And I am imagining it has a lot to do with the Bitcoin halving and how that's baked into the dynamics. How do you think moving forward, this more global adoption with ETFs, institutions, with BlackRock being such a huge holder of Bitcoin and having more control over it, with laws starting to come about that will change the way that we deal with it and that it's used and that it's traded. How do you anticipate that would interrupt the cycle as it's coming this next time around? Some have speculated that we won't see it pull back as much in the winter because now with so much institutional adoption, it is stabilizing it a little bit more. But what is your perspective now that it's more widely known, it's more widely accepted, how that will affect the halving cycle moving forward? Because a lot of people may be thinking, hey, I didn't get in on it before now, but now I know about it and I'm waiting until Bitcoin has its winter again, and then I'm loading up. So What is your perspective to share with people?
Well, I love that question, and I'm excited to actually give an answer on it. And what you're referring to is something that the creator of Bitcoin had foreseen and imagined would come to pass. And it's something like a super cycle due to mass adoption. So when this guy created this and had imagined it, he ultimately had hoped that the world would embrace it, and that would cause, scarcity to translate into incredible value. And, that's why you've got Michael Saylor actually going well beyond the prediction of each Bitcoin being $1 million. And, and then last cycle, he was saying somewhere between, and don't quote me on it, but I thought it was somewhere between 12 to 18 million as like a absolute massive down the road number. And this year he came out with a number, Ashley, I don't know if you heard it, at the Bitcoin conference, where he actually foresaw the ability for Bitcoin to hit $48 million per Bitcoin. Okay. And so what you're talking about is this concept of mass adoption super cycle. Okay. Now that is something that appears to be possible. But we want to look at things from the traditional lens of charting. And so I'm going to put a massive wet blanket on that idea for just a brief moment. And it's not because I'm not bullish and don't want Bitcoin to hit those big numbers. It's that I've got to have something to check my bullishness. I got to keep that bear story in mind. So what's the reality of the charts? Well, I just showed you that the first crypto cycle after the halving reached a 60,000% pump move, but the last one has only achieved a 350% move. So what does that mean? Well, it means that Bitcoin's becoming a mature asset. And now that we see institutional adoption, well, one of the characteristics of institutional adoption is that something's becoming a mature asset and the price volatility goes from being extremely high to extremely low because institutions are holding it and they're not constantly selling it. The first three cycles were controlled by retail. Institutions weren't involved. And so there's this idea that if the institutions get involved, well, they'll bring so much capital to it that the price will go skyrocket. But then there's also this idea that when institutions get involved, the price will become mature and flatten out. And so if you don't mind, I'd love to take back into the chart to make one more point on volatility. Can I do that?
Absolutely. Thank you.
All right. This is a deep dive today. Okay. Let's just do something here. We're going to clean this up real quick. I'm going to delete all of the drawings, and we're going to talk about percentages, okay? We're going to do a quick overview of how deep each winter was, okay? So I'm going to go back here, and I'm going to get an info line and go from the top to the bottom, and that was an 87% move correction that occurred on Bitcoin after that first pump of 60,000, okay? And then in 2017, from the top of the move to the low of winter, it wasn't as bad, but it was pretty darn ugly. We went from 87% to 84%. And so that's not an asset that Wall Street would traditionally hold. Apple stock doesn't drop 84%. If it did, Warren Buffett wouldn't own a share, okay? So remember, I've got to play the bear side, okay? So 87% down, 84% down. Now let's look at what happened with the last cycle. Let me clean up this little spot here. Okay, we're going to see how bad did things get the last time round. Okay, 77%. And so even though that's not comforting, if you had bought Bitcoin up here at the top, there's a famous video, you can YouTube it, of Snoop Dogg buying Bitcoin at it was like 67, 68,000. And then it just begins to drop, and he just, has this really emotional moment of like, oh, man. Well, if you were Snoop Dogg and you bought up at the top last time, you weren't happy when this thing came down 77%. However, let's observe the trend. We are seeing that over time, the run-up is not as strong, 12,000, 2,350. The pull-down is not as strong. So this is clearly straightening out and maturing. And we're seeing mass adoption, but it hasn't caused, this to just break the chart, okay? And there's reasons, Ashley, why Bitcoin might really become less volatile and largely trade, sideways for a period of time. But here's the main point I wanted to illustrate. One, I don't think this cycle is over. I don't think we've seen the top. Two, I don't believe that we are going to, after we do find the top, and let's just say for a brief moment, I'm going to give us two scenarios of tops. One, a failed move, similar to we had in 2021. We failed to get to the yellow, and I want to point out that in the previous cycle, we actually got to the yellow fib level. So this was a failed move. There's some that have speculated, myself being one of them, that we could end up failing here at the red level like we failed at the blue level last year. If that were to happen and we were to make a high up to around, we'll say 80K, then our pull down, let's find the number exactly, our pull down to 27 would be very much in line with what we've been seeing, 87, 84, 77, 65. And so this is a very sober and conservative idea that we do make a higher high this year, but we're not ready to break out yet because Wall Street doesn't pump it up. Why would Wall Street not pump it up? Well, they'd have their reasons to fill their bags more, have a more dominant, fully vertical integration of ownership before they run it up to $515. A move above this 68 to 515, that would be a super cycle move, and it could happen this cycle, but it might not happen until next cycle. I think we'll know pretty soon. We've had 200 days of consolidation, and I think 80K is the line in the sand. We got to open and close a candle, like I said, above this 68K, and we got to get above our previous high, which was right around 74K, and so that's the number to hit, 80K. We need to stay above it on a monthly time frame. And then we could have the super cycle. But if we do end up failing to break to a new fib level and we end at red this time, then we also may not go down as hard and only go down 64% versus 74%. Now, I gave you some pretty, pretty bullish, bearish thing. Whenever I do these videos, Ashley, afterwards, someone inevitably says, well, Josh predicted that Bitcoin was going down to 29K, or Josh just told me Bitcoin was going up to 500. Really, I haven't made any prediction at all. I'm just sharing with you the possibilities I see in the chart. And I'll say this, there's a ton of miners. Okay, this has been something important, Ashley. I've been wanting people to understand. Last cycle, we had a handful of miners. Mara, Riot was the new guys on the block. CleanSpark, I don't even know if they were doing their thing. I had never heard of them. Now we've got 50 miner stocks, and their business plans changed. They used to just be in it for profit, where they would mine and then sell Bitcoin at a profit. Now all of them are shifting to the MicroStrategy approach, where they're basically going to mine and never sell. They'd rather dilute stock or raise capital to keep the lights on, but the mission is to never sell Bitcoin. And so we could say, by looking at the miners, that people are beginning to think, maybe I shouldn't be selling my Bitcoin anymore. So when the miners no longer sell Bitcoin to keep the lights on, that is a signal. However, BlackRock owns all the miners. And what I mean by that is they own a piece of the shares on all of them. And these guys are going to run into some trouble because the price of electricity is increasing. The amount of Bitcoin harvest has been cut in half. And if they do run out of money, they're going to turn to BlackRock, and BlackRock's going to start getting those preferred shares and maybe even buying the whole company and consolidating. The institutional money has a reason to hold off on pumping Bitcoin to the big numbers until next cycle. And don't get too bullish where you think that this is only going to go up, because it's the charts that will lead the way.
That is so insightful to have that additional perspective that I have not heard what you just shared in other forums. So for all of you that are interested in better understanding, not just the charts and what they tell us, but the thought process behind the charts, make sure you go subscribe to Josh, because he will open your eyes up to a lot of different ways of thinking.
Thank you so much for having me, Ashley. It was wonderful to share this time with you.
Now, I really respect Josh's perspective. In fact, after every day when I am debriefing and trying to get ready for the next trading day, one of the things I do is I actually go to Josh's videos and I look at the technicals and I start charting my potential plays for the next day. So he's very talented at this, and we're very honored to have him on the show today to help all of us make a better decision about some of our trades surrounding Bitcoin. I hope you enjoyed today's collaboration. Don't forget, I want you to always keep learning, keep earning, and we will see you on the trading floor.